Have you noticed that Tesla's stock has been unstoppable lately, up more than 90% in just 6 months? But here's the twist. Despite the rally, Tesla's profit is expected to drop almost 30% this quarter. Revenue up, earnings down. So the question is simple. Is Tesla really growing, or is it just stretching its limits? Hi, this is Ken. In today's episode, we break down the upcoming Q3 earnings, what Wall Street is expecting, why analysts are split down the middle, and what this means for Tesla's next chapter in AI and energy. Let's get into it. Tesla will report its third quarter earnings on October 22nd after the market closes. According to S&P Global and Momo Securities, AI estimates revenue is expected at $26.6 billion, up 5.5% year over year. Earnings per share are forecast at $0.437, down almost 30% from last year. That's a rare combination. Growth in sales, but a sharp decline in profitability. Over the past 10 quarters, Tesla has missed analyst expectations 6 times. So investors are not just looking for numbers, they're looking for confidence. Now, here's where things get interesting. The analyst community is split 50-50. Half see this as a re-acceleration story driven by AI and energy. The other half worry that rising competition and shrinking margins could undermine the bull case. And with Tesla's P/E ratio above 260, the market is already pricing in near perfect execution. That sets the stage for a potentially volatile reaction after earnings. Let's start with the good news. Tesla delivered 497,000 vehicles in Q3, a new record and about 7% higher than last year. Demand was helped by new Model Y variants in China and Europe and a rush to buy before some US EV tax credits expired. After a weak first quarter, production is back on track. And the energy division, Tesla Energy, continues to grow quietly, deploying 12.5 gigawatt hours of storage in the quarter. So yes, revenue momentum is real, but the question is, at what cost? Margins remain Tesla's biggest concern. Price cuts across Model 3 and wide-trimmed automotive gross margin to levels not seen since 2019. Battery material inflation, logistics costs, and FX headwinds are eating into profits. Even though the energy business is expanding, it's still less profitable than vehicle sales today. The bottom line, Tesla is growing the top line by sacrificing margin. That's fine for now, but unsustainable long-term without new high-margin drivers like software or AI services. Now, let's look at how different institutions see this. Melius Research believes Tesla's Robotaxi initiative and energy storage expansion could usher in a second growth wave. Wedbush Securities remains bullish on AI and FSD advancements, calling Tesla a tech platform disguised as an automaker. But on the other side, Wells Fargo warns of intensifying EV competition and market share loss in China. HSBC highlights margin compression and lower sales volumes as key risks. And UBS points to rising component costs due to US-China trade tensions. So we have a split view, growth optimists versus profit realists. At a PSR of 15.7 and a PE above 260, Tesla is trading near record valuation levels. That's higher than almost any company in the S&P 500. This means even a slight miss in EPS or guidance could trigger a sharp correction. But if Tesla surprises on margins or updates the market with tangible AI progress, it could reignite the bull run toward $500. Essentially, Wall Street is waiting to see if the AI premium can be backed by hard numbers. So where does Tesla go from here? The answer lies in 2 letters, AI. Tesla is not just a car company anymore. It's an AI infrastructure company with three massive pillars: autonomous driving, energy storage, and robotics. One, FSD and Robotaxi ecosystem, full self-driving version 14 is rolling out faster than expected, and each update brings Tesla closer to a world where your car can earn money for you. That's the Robotaxi vision, a network where Tesla owners share their vehicles autonomously and Tesla takes a cut. Imagine Apple's App Store, but for mobility. Once it launches, it could turn millions of cars into revenue-generating assets. This is where the real profit expansion comes from. Not selling cars, but monetizing them. 2. Energy as a profit engine. Then there's Tesla Energy, often overlooked but growing steadily. Megapack and Powerwall deployments hit record levels, and some analysts believe energy revenue could surpass automotive revenue within a decade. Why is that important? Because energy sales create recurring cash flows and help stabilize earnings through economic cycles, something Tesla has never had before. In my view, Tesla is living on two timelines at once. In the short term, it's fighting margin pressure and intense competition from China and legacy automakers. But in the long term, it's building an AI-powered energy network that no competitor can match. The big question is, can investors wait for that future, or will they lose patience when near-term profits dip? This is why Elon Musk keeps saying the most valuable thing is solving AI. He's not just talking about cars, he's talking about the foundation of the entire Tesla ecosystem. So what will this third quarter earnings actually tell us? It's not just about beating forecasts, it's about trust. Whether Tesla can prove that its AI and energy strategy can replace the old EV margin model. If revenue rises as expected and margins stabilize, investors will see this as a bottom turn. If profits fall further and guidance is weak, the market may start to question whether the AI dream is moving fast enough. But remember this, Tesla's story has always been about building for the future. Each period of margin compression in the past was followed by new product cycles and massive scale expansions. Model 3, Shanghai, and now Dojo and Robotaxi. So maybe this isn't a warning sign. Maybe it's just another chapter in the cycle of reinvention. Tesla is no longer just an automaker. It's becoming the operating system for mobility and energy, and this quarter will show how close we are to that future. So, what do you think matters more this quarter, the numbers themselves or the AI narrative behind them? Would you buy Tesla stock at a PE of 260 if you believe Robotaxi and energy are coming sooner than people expect? Drop your thoughts in the comments. I read every one of them. Okay, next I checked chart review. Show the revenue and EPS trend from the Moomoo charts. Explain how the curve shows a recovery but not yet a return to 2024 profit levels. Highlight that EBIT is rising again, from $4 billion in Q1 to $16 billion expected in Q3. Look at this curve. Revenue is back up, earnings are still catching up. It's like Tesla's engine is revving, but the gears are still shifting. Next, check the market reaction scenarios bull case. Tesla beats EPS expectations and teases progress on FSD version 14 or Robotaxi. Stock could push beyond $450 to $500 as AI momentum returns. Bear case, if margins or guidance disappoint, profit taking could bring the stock back to the $380 range short term. I think Tesla's story will no longer be judged quarter by quarter, but system by system. FSD, energy, and AI. Those are the real metrics that will define the next decade. We'll be breaking down Tesla's actual Q3 results right after the call, with deep analysis and AI-driven insights you won't find elsewhere. Thanks for watching. I'm Ken, and remember, The future doesn't just arrive, we build it. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.